Something just happened behind closed doors at the IRS. No press conference, no public announcement, not even a headline on the evening news. But this one quiet change could mean the difference between you getting thousands of dollars in stimulus money, getting nothing at all. And the strangest part, the IRS isn't exactly rushing to tell you about it. In fact, most Americans don't even realize that the rules for stimulus eligibility have shifted, and by the time they do find out, it might be too late to claim what's rightfully theirs. If you've ever dealt with government programs before, you know how this works. The people who have the inside information always seem to be the ones who walk away with the benefits, while the rest are left wondering why they didn't qualify. That's exactly what's about to happen here, because this new IRS rule doesn't scream change on the surface, but buried deep in the updated guidelines is a line that could instantly disqualify you if you don't meet it, even if you were eligible just months ago. And yet, for some Americans, this quiet shift could actually open the door to benefits they were never able to claim before. To understand why this is so important, we need to rewind for just a moment. You probably remember the big rounds of stimulus checks over the past few years, kind of lifeline that helped people pay rent, buy groceries, and stay afloat when times were tough. Back then, the qualifications were fairly broad: income limits, filing status, maybe some checks for dependents. It was a system that, for all its flaws, was still simple enough that millions got the help they needed. But this new rule, this one changes the game entirely. According to internal IRS documentation, which, by the way, wasn't posted front and center on their website, certain groups of people who used to qualify may now be cut out completely unless they take one extra step. This isn't about fraud, and it's not about budget cuts. It's about a quiet restructuring of eligibility definitions, and it's being rolled out in such a low-key way that unless you're actively looking for it, you'd never know it happened. I've spoken with financial advisors, former IRS employees, and tax professionals, and they all say the same thing. The language in this change is intentionally complex. It doesn't come right out and say, you won't get your stimulus. Instead, it tweaks definitions and requirements in ways that make it harder for certain Americans to qualify, particularly those with irregular income, certain types of retirement benefits, or unfilled tax returns from previous years. But here's where it gets interesting, because while some people will lose eligibility, others who never thought they qualified may suddenly find that they do. It's almost like a hidden backdoor into the stimulus system, if you know how to spot it and act in time. Before I explain exactly who's affected, I want you to imagine this. It's a few months from now. You're expecting your stimulus payment. Maybe you've already made plans for that money. But instead of a direct deposit hitting your account, you get a notice from the IRS saying you're ineligible under the new rules. You call the number on the letter. You wait on hold for an hour. And when you finally speak to someone, they tell you there's nothing they can do because the deadline to update your information has already passed. That's the nightmare scenario, and it's exactly what this new change is setting up. What's really going on here? At the core of this change is something the IRS is calling a streamlined eligibility verification. Sounds harmless enough, but in practice, it means that they're tightening the automatic checks they run against your income records, tax filings, and benefit claims. If there's any mismatch, even something as small as a missing 1099 form from a gig you worked, you could be flagged as ineligible until it's corrected. And here's the kicker: the IRS isn't planning to reach out proactively to everyone who's affected. That means if you don't already know you've been flagged, you won't find out until your stimulus is withheld. In other words, they shifted the burden onto you to verify your eligibility before the payment date. For retirees and seniors, this is especially critical. Many older Americans rely on Social Security benefits as their main source of income, and in the past, those benefits didn't disqualify you from stimulus checks. But under the new system, if your Social Security income records don't perfectly match the IRS database, for example, if you recently changed banks or had a name change that wasn't updated everywhere, you could find yourself locked out of the program entirely. For working families, the trap is different but just as dangerous. If you have side income, freelance work, or anything outside of a traditional -2 job, you need to make sure every bit of it is reported and matches exactly with IRS records. Otherwise, the system will see you as unverified and hold back your stimulus until you fix the discrepancy, which could take weeks or even months. The bottom line is this: the IRS has changed the rules quietly, but the consequences are going to be loud and painful for those caught off guard, and yet, for a small group of Americans, this could actually be good news, because certain restrictions that used to block eligibility have now been relaxed. If you were previously excluded because of a minor technicality, like a missed filing year or a dependent age limit, you might now qualify, but only if you act fast to claim it. In a moment, I'm going to break down exactly who needs to take action, how to check your eligibility under the new rules, and the single step you can take today to make sure you don't lose out on money that could be sitting there waiting for you. But first, let me make one thing clear: this isn't fear-mongering. This is about understanding how a quiet change like this can completely shift the financial future for millions of Americans, and why the IRS silence about it is the most alarming part of all. Oh, here's where it gets tricky and honestly a little unsettling. While the IRS hasn't made a flashy announcement on TV, in press conferences, or in big social media campaigns, these quiet changes are already in effect. That means for millions of Americans, the rules that determine whether you were eligible for stimulus money have shifted without you even realizing it. And this isn't just about people who never got their stimulus before. It's also about those who already received payment but might now be told they weren't actually eligible. Or worse, they could be asked to pay it back. Yes, you've heard me right. If your situation doesn't perfectly align with the IRS updated criteria, you could get a letter, not a check. Imagine waiting for a payment that could help you cover your rent, medication, or groceries, only to open your mailbox and find a notice saying, "We've reviewed your eligibility. You no longer qualify." That's not just disappointing, that's life-altering. The key difference here is in how the IRS is calculating your eligibility. They're factoring in things that weren't as strict before, things like recent income spikes, changes in dependents, and even certain types of tax credits you've claimed. The new system cross-checks your 2023 and 2024 tax filings more aggressively than ever. It's almost like they've built a filter so fine it catches people who previously would have slipped through and still gotten paid. Oh, why are they doing this? Well, some officials are framing it as a fraud prevention measure, but let's be honest. The government's track record on protecting everyday people from these sudden shifts isn't great. Often, policies like this end up hurting the very people who need help the most. It's one thing to prevent fraud, it's another to quietly shift the line who qualifies and not clearly tell the public about it. And here's what's even more concerning: the IRS isn't obligated to personally call you or send you a detailed explanation of every eligibility tweak. The changes are tucked away in updated tax guidelines and policy bulletins most Americans will never read. That means, unless you're actively looking for this information, or unless someone tells you, you could miss the fact that your eligibility has changed until it's too late. But this isn't just about missing a check this time. This change could have ripple effects for years. If you're denied stimulus now based on these new rules, that decision could be used as precedent in future relief programs. Essentially, the IRS could point back and say, "You weren't eligible then, so you're not eligible now." That's why understanding this now, not next year, not when it's already cost you thousands, is so critical. So what should you do right now? First, don't panic, but don't ignore it either. The smartest move is to review your last tax return and compare it to the IRS current eligibility criteria. Check the fine print on dependents, income thresholds, and any recent life changes like marriage, divorce, or a new job. Even small differences can push you above or below the threshold. Second, keep your documentation organized. If you find a discrepancy later, you'll need proof tax returns, pay stubs, even letters from employers to challenge any IRS decision. If you qualify under the old rules but are denied under the new ones, having your paperwork ready could be the difference between getting your check and losing it forever. And finally, stay alert. The fact that this change happened quietly means other changes could be coming just as silently. Following official IRS updates, credible financial news, and yes, channels like this one could be your lifeline to staying ahead. The bottom line is this: the IRS may have made a quiet change, but its impact could be deafening for your wallet. Don't wait until you're staring at an empty mailbox or a rejection letter. Act now, double-check your eligibility, and make sure you're prepared to fight for every dollar you're entitled to. Because at the end of the day, this isn't just about stimulus checks, It's about a system that can shift under your feet without warning. The only way to protect yourself is to stay informed, stay prepared, and never assume that what was true yesterday is still true today. And before you click away, if you found this information helpful, make sure to subscribe to this channel right now. Hit the notification bell so you never miss an update that could affect your money, your benefits, and your future. And if you know someone who's counting on this stimulus, a family member, a friend, a neighbor, share this video with them. Because the worst thing that could happen is not just losing a check, it's losing it because you didn't know the rules had changed.